is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Sharm el-Sheikh for COP27, and here's what's coming up on today's program. We start with China. Looking past COVID, Hong Kong stocks power Asia higher as investors downgrade concerns over China's vow to unswervingly stick with virus controls. Europe opening lower. Tech turmoil. Apple cuts its outlook for iPhone shipments on China's lockdowns. The Wall Street Journal says Meta's planning to start layoff staff this week. Plus, COP kicks off, but UN climate talks start in Egypt with a deal to discuss climate reparations. We're live in Sharm el-Sheikh. So here we are. If you look at the markets, and I know our Danny Berg is on standby. Thank you, Danny, for bringing us up to date with all the market moves. I think we opened actually lower, but I feel like today it's pretty much unchanged because the IMF managing director, who's just with me, commented on the fact that we're seeing green in Europe, and that, of course, is a good thing. The focus here in Sharm el-Sheikh is not about the lofty promises that we've seen maybe in other COPs. It's about implementation. We'll get to that in a second with our, well, I was going to call him Green Tsar. That's a thing, Danny. John Farr, so we'll get to him in a second. But first, the markets. It's all about inflation this week.
Yeah, it's all about inflation. I mean, what a week, Francine, from COP27 to midterms to inflation. There's a lot of risk in this market, so it is interesting. As you say, there's green in Europe, a pretty sizable turnaround. We did open the morning lower, and yet here we stand. You're looking at both Asia stocks and S&P 500 futures higher. I'll show you what the Europe session looks like in just a moment. Asia stocks, those have been charting higher for pretty much the entirety of the day, led by China, despite Chinese officials saying that, no, we're holding on to COVID zero. Sentiment has just been so depressed that folks are still happy to go and buy the rumor. Goldman Sachs says that you could see gains of 10% in Chinese equities should China start to reopen. Now, S&P and Europe, they start to move into the green thanks to a drop in the dollar. The dollar did start stronger today. Again, how long does that last if we are indeed going to get stronger CPI data at the end of the week? But Francine, it's interesting to look. These equity markets are getting solace from a weaker dollar because front end of the curve yields are moving higher, up 4.5 basis points at 4.7%. Could they go higher? As Larry Summers says, that terminal rates could be 6% or higher. So I mentioned Europe, just taking a quick look at the map before throwing it back to you. In Egypt, Francine, you are seeing green essentially everywhere in Europe. It is being led by even some of the higher beta sectors like Italy, or regions, I should say, Italy, Germany. A little bit of underperformance from UK stocks. Those are just up 0.1%, but perhaps that also has to do with gas, oil rather moving lower this morning. So some of the oil majors not be as happy with that picture. But overall, Francine, folks are looking for a reason to buy.
Yeah, I love that. Danny, thanks so much. Also looking very sharp, if I say so myself, in that white jacket. Good taste, Danny Berger. You rock. I'm joined here at COP. Great color combo at COP27 by Bloomberg Green's executive editor, John Farr, who's leading a report in Egypt. And I showed up at Sharm el-Sheikh, and I was given a wonderful edition. Good morning. Welcome to the program. Of Bloomberg Green. This is a must-read magazine, and I love this, Decarbonizing Your Life. So I hope everyone, every head of state also reads it and implements it with the citizens. So we're not expecting some kind of like lofty promises here, right? Action is everything. What is a good deal scenario for COP27?
Well, I think you're right. This isn't going to be like one of those big COPs like Paris, even like Glasgow, where we had these huge sort of market signals that were sort of, you know, gave green lights to investment in renewables around the world. This is what they call an implementation COP. This is going to be about countries checking their homework. And also it's about keeping the climate drive alive after a year, you know, where we've seen a huge dash for fossil fuels after the invasion of Ukraine. So really one of the big signs of success here will be, at least at the very least, countries committing to try at least to keep the goal of 1.5 degrees Celsius alive.
But what commitment can we actually achieve here? So first of all, we don't have China. I mean, they're still the biggest emitters of gases around the world. Of course, Russia is not present. So even if we have the 100th head of state here committing to something, are we going to reach 1.8 to 2, or is it just a directional travel that we care about more?
I think at this COP it's the direction of travel now. While we're not going to see sort of massive international pacts and agreements, I do think it's a COP where it's interesting looking at the smaller deals that are going to be announced. So In Glasgow, we saw this initiative for the just energy transition in South Africa, $8.5 billion to help South Africa transition off coal to renewables. We're going to see this afternoon, hopefully, a final agreement on that. And if that agreement then will serve as a blueprint for similar deals in Indonesia, in India and Vietnam. So really what this COP is about is a lot of the nitty-gritties of climate financing. How can we help the poorer world, the developing world, transition away from fossil fuels? So a lot of the devil will be in the detail on this one.
John, we promised money, right? The rich countries promised $100 billion annually to some of the poorer countries. So now we talk about loss and damage. I know it was a great Bloomberg scoop. You have a fantastic team on the ground here. But actually, unless the U.S. really commits money, like hard cash, unless some of the big ones say, like, this is what I'm funding, do we really get anywhere? Or is it still just talk?
So there is this credibility problem. You're absolutely right. So the global north has started to talk about loss and damage. It is on the agenda finally as a way to keep the developing world on the train, so to speak. But really when President Biden comes here at the end of the week, that's going to be one of the big questions that he's going to be asked is when is the rich world going to step up some of the promises that we've seen. Another interesting highlight to watch, actually next week, President-elect Lula from Brazil will be here.
This is a U-turn, right, for Brazil?
Absolutely. Well, it's a huge surprise given where we were 2 years ago in Brazil. And I think what Lula brings to the table is this new vigor to save the Amazon. And I think him coming here will, again, put a lot of the rich countries maybe on the back foot. He will certainly be an advocate for the developing world in their demands for more money to help them adapt to climate change.
John, talk to me a bit about finance. So I know we covered together, of course, Glasgow, what's happening with GFANZ. Then there was rumors about maybe, some of the big asset managers dropping out. Is it better to have a broad church? I mean, can we actually expect something, where you say, look, maybe we'll be less ambitious, but we want everyone to at least commit to the pledges?
Yes, I mean, that is the big question about the banking system, like just how committed are they to the idea of getting their loan portfolios to net zero by 2050. I think advocates of this broad church would argue this has been a very difficult year for climate change, for the climate movement, given everything that we've seen in Ukraine, given the fact that we have all of these other energy priorities. So advocates of a broader church would say that, look, this year, next year, the year after, let's just keep everybody together, going in the right direction. I think eventually, 2, 3, 4 years down the line, if GFANZ and other initiatives like it are to have credibility, then banks are going to have to commit themselves to sort of tighter goals. But right now, given the amount of regulation that's coming from Brussels, coming from Washington, a lot of banks are really nervous about signing up too much to this. Also important to bear in mind, this is all happening against the backdrop of the midterm elections. Banks are very worried about attacks from the Republican Party about being too pro-woke capitalism, etc. And so it feels like this is a year where, when it comes to the banks, it's like, let's keep this broad church together, and then maybe in a few years' time, let's see what more we can do.
Right. We'll be following all of the developments. Of course, John Fryer, our executive editor for Bloomberg Green. First of all, pick up the magazine. Is it available for everyone, or do you have to be a participant?
You have to be a subscriber.
You have to be a subscriber. Okay, so you can get it. You just have to pay for it. But John has a great team.
The website is free this week. The paywall is lifted.
The website, it's true. We got rid of the paywall, actually, for Bloomberg Green for 2 weeks. So read all of the things coming out of COP27. Now, coming up, equities in Hong Kong advanced earlier as investors looked beyond risks over China's virus policy. So we'll get more on the China reopening story. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 at Sharm el-Sheikh. Now, there's one person that you want to speak to. That's the Dutch Prime Minister, Mark Rutte. We have about 100 heads of state showing up. Of course, here it's about implementation. It's about action. It's not really any of these lofty goals that maybe we were promised and given at Glasgow, Paris, and certainly Kyoto, but that was a long time away. I am delighted to be joined by Mr. Mark Rutte, the Dutch Prime Minister. Thank you so much, Prime Minister.
Good to be here.
For joining
Good
us.
to see you
You're
again.
actually the first head of state interview that I have here, so give me some hope. What are you expecting? What are you here to achieve? What would be a good thing?
I will be optimistic. It will not be easy because there will be many issues, but you feel the sense of urgency that we need to get to implementation, that we have to work on everything to make the 1.5 degrees still attainable. but also to get Africa on board. And of course there are the issues around financing for Africa, loss and damage, but I think we can create this week and next week an atmosphere of dialogue.
Atmosphere or hard money? Because this is what, I mean, when you look at loss and damage, the developing nations want money to say like, look, I've been wrong, you guys have done the emissions, I have the floods, pay me.
Yes, I understand that reasoning. At the same time, we already are at this moment committing the 100 billion to help the rest of the world also, and also the global south to get on board with tackling climate change. But obviously we need to listen to the arguments and to take it from there. So I will also in my speech address loss and damage. I will say that is a fair debate to be had, but we cannot allow ourselves to get stuck in that and not to move to what is really necessary, which is now to roll out all the plans.
Yeah, so when would you be ready to give some money? Or when do you think the Nord countries, the West countries, I don't know how you want to describe them.
We have to work on the 100 billion. So what the Netherlands is doing, we will over the next couple of years increase our climate spending geared towards the 100 billion from 1.2 billion to 1.8 billion. And given the size of our economy, that is a big amount of money. We will make sure that as part of that, we will commit 300 million in grants discussing climate adaptation, addressing climate adaptation, which of course for my country, being for half of the country below sea level, is a key issue with a lot of knowledge in my country to deal with that. So on this issue we want to really take the lead with others, of course, to make sure that we can solve that debate on the 100 billion.
Do you think that when you look at all of the climate action, we would be further ahead have we not have to deal with inflation? So are Western heads of state distracted by the crisis? And it's a good distraction. It's like the crisis, the inflation, the cost of living. And could we have achieved more if we hadn't had that in the last 12 months?
Yes, of course, and what is behind that is the terrible Russian attack at Ukraine and the unprovoked aggression of Russia against Ukraine, which we all are condemning. It's crucial also to get the hearts and minds of the Africans on board on this. I just spoke with the Tunisian Prime Minister who has voted in favor of the UN resolution blaming Russia for what it's doing in Ukraine. So many African countries are really getting on this narrative and not believing Russia that it is the West which somehow started this. No, it is Russia starting this, which has an impact on food security. So food security will be part of these 2 weeks. Water will be part of these 2 weeks. But you're right. The fact that this war is going on is impacting inflation, is also impacting, let's say, the re-emergence of coal as an in-between necessary means of getting electricity done. But of course, it should be limited in time.
Prime Minister, I also want to talk to you actually about China. So we know that the US has been lobbying ASML to stop selling some of the productions to China. What's your stance on that?
We were working very closely together with the Japanese, with the Americans, on the whole issue of tech and how we make sure that on this we really coordinate our actions. That's all being done behind the scenes, not something I can really talk about all too openly in an interview like this, but there is a close coordination. I'm visiting Seoul next week, so this is really high on the agenda. We are really coordinating with Asian partners, but also with the Americans.
But do you think that China today is a reliable partner still? Trading partner?
China is the second biggest economy in the world. Of course, we have worries about many issues around China, but at the same time, we also need to maintain the dialogue with China. And I really believe that it is that two-track approach, and we should not be naive. So discussing the issue of tech and also the export of the latest technology itself is a legitimate debate, which we have amongst our partners.
What do you think of Olaf Scholz's visit to China?
I understand the visit because for two reasons. There is a large interconnection between the Chinese and the German economy. And secondly, by making this visit, Olaf Scholz was also able to address some other issues, like the Chinese stance against Russia. The fact that China has also committed itself by saying we do not accept nuclear weapons to be part of the Russian-Ukrainian conflict. And also addressing human rights issues. So also here, a visit like that is also an opportunity to address all the other issues.
Do you see Europe holding together in their fight for energy security and holding front to Putin?
Absolutely. Everybody is convinced that this is not just a European fight. Nobody in the world can sleep safe at night as long as this conflict is still continuing. not only in Europe, not in Africa, not in Latin America, not in Asia. This conflict has to stop. Russia needs to lose this. Ukraine cannot lose this war, and we all have to support them.
Mr. Ruto, just because I have you here, and this is a great addition, are you decarbonizing your life? I was starting to read it. Is there anything that you've done in the last couple of years to actually
Well,
make
one
it
of the
better?
things is that I myself do not believe in getting more stuff in my house. So I try also with my friends to tell them there is a moment when you have enough. Maybe one more book or one more whatever, but stop collecting and gathering more stuff into your home. And that's also helping, I think, here.
Yeah, I have the same.
And if you collect new stuff, then make sure that it is in a climate-friendly way.
Yeah, I do that. One in, one out is a rule of the
That's
household.
great. And when you have a small house like me, you need to do that, otherwise you get stuffed.
There you go. Well, you're the next edition of
Absolutely.
Bloomberg Green. Thank you so much, Prime
Thank you
Minister,
so
for
much.
joining us, the Dutch Prime Minister there, Mark Rutte. Now, we're going back to, of course, one of our top big stories, and that's China and some of the things going on there. Traders are hoping of an earlier than expected reopen. We're a little bit disappointed that their hopes dashed. So let's get straight to our reporter on the ground to see exactly what happened with the commitment to COVID-0. Jing-Shang Han, talk to me about what happens next.
Exactly. So actually here in Hong Kong, we are seeing stocks climbing again today, even though China actually said it will continue to stick to COVID-0 over the weekend. So there's a lot of hope that the COVID-0 policies will come to an end. However, a lot of those information that are circulating on the ground are actually unverified. So what we actually bring to the table is that we just launched Bloomberg's China COVID dashboard. It features exclusive data points that showcase China's COVID outbreaks by province. And we hope this will be helpful for investors and China observers to understand where the impact will be if the more cases are showing up. And today we are already seeing like 6-month high of COVID cases, and that's something we will continue to watch.
Okay, Jing-Shan, thank you so much. Jing-Shan Hong there with the very latest on China. Coming up, we'll have plenty more on tech. Tech in trouble. We look into the outlook cuts and layoffs announced by some of the major players. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 in Sharm el-Sheikh, Egypt. Now joining us to talk about COP27 is the Prime Minister of Norway, Jonas Gahr Støre. Thank you so much, Prime Minister, for joining us. You are our second head of state today. So what are you expecting from COP27? And it's great that you showed up. Norway relies so much actually on oil and gas. How difficult is the transition?
Well, I mean, the first objective is to keep the pressure for 1.5.
Yeah.
We have to keep that hope alive. Every digit here will matter. So I hope we can deliver result and progress that demonstrate that the world community is moving in that direction.
Do you think we'll get it without China here?
Well, that's a big complication, and the war in Ukraine is another big complication. War is bad for everything, also for climate work. But, you know, first, we have to stay committed to cutting emissions. And Norway, for its part, is reinforcing our pledge. So we will now be at 55 by 2030, together with the rest of Europe. And then we have to make progress on some of these key issues, such as shipping, forests, vulnerable communities. And there are a lot of things going on here which I think can give us hope and inspiration to move forward in the aftermath of the conference.
Prime Minister, cutting 55% emissions from 1990s is extremely ambitious. How concretely will you achieve this?
Well, we have to move to renewables. Norway is leading that way with offshore wind, which is going to be our major investment. But also, believe it, in solar, we can do major progress. We have to succeed in carbon storage, cutting the carbon emissions and store them. Norway has done that for 30 years on our continental shelf. So there's a lot of technology we can bring to scale. And then you have to do it throughout society, you know, in transport, in waste, in energy, with clear targets and with clear incentives. You have to make CO2 far much more expensive, as we are increasing our taxes. And then we have to push the transition, which I believe is possible.
Prime Minister, I mean, philosophically, you make so much money, right, with one hand. and then you want to do renewables. Is it useful to have high oil and gas prices to be able to fund renewable projects? Do you think it accelerates it, or?
I can tell you that it is not in Norway's interest to have these hikes in energy prices. I'll give you two reasons. Immediately back home in my country, this is driving up electricity prices, hitting households. Secondly, stability in energy prices at a low level is good for the world economy. It's good for the European economy. So we make every effort to provide Europe with gas in these difficult moments. We have increased gas export from the Norwegian shelf by 8 to 10% over the last months. That is important for storing gas in Europe. But then we have to move forward and push for this renewable transition, which paradoxically, after the war in Ukraine, can come much faster than it had planned. And that's necessary. Yeah, I think it is. I think really the awareness in the European Union that you have to go big on offshore wind, on solar, on hydrogen, on carbon capture and storage, much greater awareness now than only 10 months ago.
Do we have the building blocks to be able to transition?
Yes, we do.
So, are we not lacking cobalt? Are there certain components that actually we need to be better at getting to scale?
Rare minerals and all of that in part of it with battery factories and so on. But, building the offshore wind installations, be they permanent on the seabed or floating, as we now can do, depends on all the experience we have from the oil and gas industry. So the most complex platforms gives us engineers and workers who can really make these new installations. So it's very much about political will and investment, and Norway will be leading in investing in this because this is the future.
The Prime Minister, Norway has also been one of the clear leaders in electric vehicles. Will that continue? How will that continue?
After 2025, you will not buy a fossil car in Norway. And the sales of cars in the last quarter of this year is at 80 to 90% at electrical vehicles. So this is happening, and to do it, you have tax incentives, you have to build the infrastructure for charging, and then people come along.
The winter months are going to be extremely challenging in terms of energy security. Do you worry that Europe will splinter because of this?
I think it's going to be a tough winter. I think now with the gas storage in place, I think we are, pretty safe, but it's going to be hard for European industry. Prices will be still not very stable. Ukraine will be suffering. We are trying to see how we can support Ukraine in getting gas for their use. So I think it's going to be hard, but I think politically it has been remarkable during these months that politically Europe has been very consistent in supporting Ukraine. And we are a small European country, we are neighboring Russia, and we are sending a clear message. We can not let that happen. We cannot let a big country use its military force to invade the neighboring country, and as we see before our eyes now, bombing this country, its infrastructure, its energy and its water. So it's important to stay united politically. And then hopefully at one day, this terrible war can end and Ukraine can have its right. And I hope that will happen at the negotiating table.
So what should be the main message? If you're a politician in Europe today, your biggest challenge is probably to get the citizens behind you in these tough winter months.
If we do this separately, we will all lose. So we have to have strong cooperation, securing energy coming in. Here Norway can contribute. Then we have to have burden sharing, so that if we have to use less energy, let's do that together. And then we have to push in a big way for these new renewables. Because the shortage we will have now in a couple of years is a pause. And then we may have a lot of energy if we really invest and build. And around the North Sea, you have Norway, UK, Netherlands, Belgium, Germany, and then Denmark and Sweden. We can build a network of offshore wind, which, in a few years' time will be there providing our economies with energy.
That will happen?
That will happen.
That will 100% happen. There's commitment from
we have
you
made
think you'll
the
have
pledge.
enough commitment?
We will build 30 gigawatts of hydro wind coming from our shelf. That means that we will go from 5 to 1,500 big windmills. And the plans are being laid out from now and through the 2030s. And then that has to coexist with gas, because gas is a stabilizing energy when you go for sun, solar, and wind. But in order to do gas, and gas can also give us hydrogen, we need to capture the carbon from the gas and store it. And Norway now has a full value chain that can deliver that service. We can capture gas from waste plants, from the hard to abate industries, from cement, or from gas production, and we can store it 3,000 meters under the seabed, and it stays.
Prime Minister, given all of these challenges, do you think inflation is coming down a little bit? Is that hopeful, or do you see the signs in the economy?
Well, that's the main priority now for me, is to make this inflation chapter as short as possible. So, the central banks do their job, and interest rates have gone from 0 to a high level, and we have to hold back in our budget policies, not to push that. So I hope when we get into 2023 that it will stabilize and then hopefully can come down. But, there's an unknown factor here, which is the war. And war is bad for the economy, it's bad for the climate, it's bad for people, and it has to end.
So how do you expect inflation? The trend is what, lower inflation, or actually inflation staying at a little bit lower but then staying high for quite some months?
It depends. You cannot have inflation running into the 2 digits. It has to come down. So it has to stabilize and then come down, so that households and businesses can plan predictably on the future. Inflation is bad for planning, and we have to get it down.
Okay, Prime Minister, thank you so much. Jonas Gahr there, the Prime Minister of Norway, with a robust conversation on some of the challenges ahead. Now, let's get straight to a market check. For that, let's go to Danny Berger in our London office. Danny, what do you have?
Well, Francine, the Prime Minister is saying there that inflation has to come down. It's certainly something markets are hoping for. A pretty sizable rally started in Asia. Really, valuations there have been so depressed when it comes to China and COVID zero. So despite officials over the weekend saying, hey, we are sticking with COVID zero, folks, we're still buying the rally. Now, we started out this morning with a negative European cash session and negative U.S. futures. Both of those have turned around. So you're looking there at S&P 500 futures up 0.4%. In Europe, it's a gain of 0.5%. Perhaps, again, it is this idea that valuations are lower. The sentiment is so depressed that you are looking for anything to buy. One of the things that's also aiding us in this ability for equity markets to rally higher is a softer dollar this morning. It was soft after NFPs on Friday, so it's continuing for a second trading day, despite the fact that yields off the highs, but still pushing higher up 2 basis points. Now, tech is a big part of the story as well. Apple is down pre-market by about 1%, and it's said to have trimmed its iPhone 14 output by 3 million handsets as demand softens. The Wall Street Journal reports that Meta will also begin laying off thousands this week. And in other tech news, Twitter is now asking for some fire staff to return. So, Francine, while you reset at COP29, I want to get into the tech conversation with Bloomberg's Charlie Wells, who's on set with me now. Charlie, starting it off with Apple, which had been more immune from other tech to the bad news, but we got bad news from them this morning.
Right, so they were able to maintain strong demand for the past 2 years, while a lot of other handset makers really struggled with that. They were able to really navigate somehow through a lot of these supply issues, but we're seeing both of those headwinds start to hit the company. So for its iPhone 14 Pro, they're really struggling with some of these COVID lockdowns in Zhengzhou in China. And also on the demand side, we're actually seeing that more affordable iPhone 14 that was supposed to, bring in a wider swath of consumers. There's softer demand for that, and that seems to be what's responsible for this cut in output.
And it is tech, to be fair, that seems to be running into these issues. Of course, a different business model, but Meta as well. We learned at least a report from the Wall Street Journal about letting folks go. And this follows on from last week, a lot of negative news.
Right, so much bad news in the tech space, and now we're really seeing it kind of come to play with employment. And, as far as this report about Meta, it seems like thousands of jobs could be affected by layoffs. These could start as soon as Wednesday, and we do know that staff have been told to stop making non-essential travel, so this is serious. When you think about Twitter, too, some of the news that we're seeing there is that actually, the company laid off 3,700 workers. That's a huge number last Friday, but then in a reversal told dozens to come back, that maybe they were fired in error or that they were too valuable to certain projects. So a lot of change in Silicon Valley.
And apologies, Charlie. We didn't get enough time to get into Twitter, but to be fair, we'd probably need an entire hour for that. So
yes.
Best we save it anyway.
Yes.
Charlie, thank you so much. Bloomberg's Charlie Wells there on tech. Now, coming up on the program, we speak to World Trade Organization Director General Ngozi Okonjo-Iweala. Don't miss that live interview from COP27 in Egypt next. This is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 Sharm el-Sheikh. Now, joining us now is Dr. Ngozi Okonjo-Iweala, the WTO Director General. Dr. Ngozi, thank you for joining us. As always, when you look at climate change, what can trade do to help in the advance of stopping climate change?
Thank you. That is a really important question. And actually, that's why we're here at the WTO. We are launching a trade and climate report, our flagship report, that shows that, look, without trade and good trade policies, you cannot get to net zero by 2050. If you want technologies that will help with renewables, for instance, with helping mitigate climate change, trade helps to move them from where they are produced and made to where they are needed. Without trade, you cannot do it. Environmental goods and services. If we allow a free flow of trade, we lower the tariffs on these goods, this will help with adoption of these technologies. So trade is critical in so many ways.
So Dr. Ngozi, concretely, what does that mean?
What that means is that when countries are looking at their nationally determined contributions or plans,
yes,
the promises they made, when they are revising them, they need to stand back and say, have we incorporated trade? Have we thought about what to do with environmental goods and services so they can come in cheaper, so we can produce them more, so we can disseminate? And, have we thought about diversifying supply chains for these products so that we mitigate risk? So there's so many aspects of trade that have not been factored into plans, and that's what it means.
And so that will change from now on. Dr. Ngozi, the EU, Korea, and China have all criticized America's Clean Energy Act, right? The Inflation Reduction Act, and they've threatened to file a WTO dispute. Do you think this violates some of the trades?
Let's put it this way. I want to make it clear that WTO rules encourage our members to take as many steps to reduce carbon emissions as they possibly can. What we don't want is rules that discriminate in favor of domestic products against like products elsewhere. Now, some of our members feel that perhaps the Inflation Reduction Act may have elements of subsidies that are discriminatory against their own like products. They are talking to each other, and that's what we prefer. We don't want disputes to come to the WTO, and I think those talks are advancing. So we wait and see how they shape up.
But do you think that actually countries should get a free pass if it's to help climate change? So should we look at it through a different lens, even if it's subsidies?
It depends. There are subsidies that are helpful towards reduction of carbon emissions.
Right.
If they do not, in the WTO, violate or discriminate against other members' products, then it's fine. That's it. So if you're going, there are good subsidies that can help us in this fight against carbon emissions and climate change. And we don't have any problems with that. We just need to make sure that other members do not feel this is militating against their own output and production. We don't want a subsidy war. We don't want it to degenerate to the lowest common denominator where, countries cannot compete because they don't have the money to give these subsidies.
Do you worry, Director General, that, for example, the fisheries agreement, I believe, took 22 years to come to fruition. Do you worry that maybe some of the efforts surrounding climate change take so long that we miss targets, that actually, despite your best efforts, the concrete action will just not be there?
Well, as you said, Francine, the fisheries subsidies agreement was going for 21 plus years, but we finally got it done last June. And we've shown that, look, I, as WTO DG, am totally impatient. I don't think we should spend that kind of time on agreements. So with respect to climate change, it is with us. We're seeing the evidence. So we can't afford to waste time on coming to any necessary agreements.
So it's been a year since you've also talked to EU policymakers about a EU carbon tax. Where do things stand right now?
Well, look, there are 70 fragmented carbon taxes and approaches in the world at this time. It's a very fragmented approach. It's good that domestic policymakers are thinking of what they should do within their countries to try and lower carbon emissions. So we're all for that. I think our issue is that with 70 different systems and more coming, we need to think of what that means for businesses. How do they comply? Developing countries also begin to see some of these and wonder, are they protectionist or not? So what we are advocating at the WTO is a global approach, a global carbon price. And we're working on a framework right now that would lead to a global carbon pricing system that will take into account the contribution of countries to carbon emissions historically. It will take into account the level of income, differentiated responsibilities, as was acknowledged in the Paris Agreement. It will take into account the target for below 2 degrees Celsius. And if we are coming up with a framework that will show what would be the carbon price at different levels of development for different types of countries based on these parameters.
But do you worry, DG, that actually EU carbon border tax is in contravention of some WTO rules if it comes in place like that?
Until the carbon border adjustment tax is implemented, the devil is in the detail. So, in theory, we are not against, but if in the implementation there are issues that result in protectionist approach or discriminatory measures, then there'll be a problem. Right now, we are not there yet. It's the implementation that is going to be key.
We were talking also about the need, of course, for some of the rare earths, but one of the other things, for example, cobalt needed for some of the renewables, as we transition into a greener economy. This goes into also the worker rights or mining rights in, for example, the Democratic Republic of Congo. Does WTO play a role in that?
Let me tell you something. The WTO absolutely says its purpose is about people. People don't know this, but WTO's purpose, as inscribed in the agreement that set it up, says it's about enhancing living standards, creating employment, and supporting sustainable development. So we absolutely care, and we would not be subscribing to a situation in which there are violations of sustainability, which doesn't enhance the living standards of people who are involved. Absolutely.
So what's the right way? If you look at cobalt, we need it so badly, but we also need to protect the rights of miners.
The right way is that businesses who are extracting this should, one, not use children to do the work, because that is not right. They need to be in school, should pay the workers a living wage, and should mine in a fashion that is sustainable, and that we need to pay the right price for this. When the people who mine get a pittance, when you look at the final price of the product compared to what they receive, this is not right. So we need to fix all of that. This is a doable proposition, and we should do it.
Director General, overall, you're hopeful that we'll achieve something at COP27. I know this is about implementation and adaptation, so we're not expecting the big headlines that we've seen in the past. But are we going to get action?
I think we need to get action. So
that doesn't sound optimistic, DG.
I'm hopeful. I think we should come out of here with at least one or two things agreed. I don't want to be Pollyannish or too optimistic, given where we are in the world with all the crises. Policymakers are completely overwhelmed with fighting inflation, energy price, the food prices, debt, distress in poor countries. But I hope we can come out of here with specific packages for a few countries, developing countries, that will enable them move forward, and agreements on what to do. For instance, moving forward on loss and damage, on adaptation, and so on. In fact, trade is an adaptation tool. Yes. So I hope we can also make that point. And so there are some things we can agree on here that should help us move forward.
Director General, thank you so much for joining us. That was Dr. Ngozi Okonjo-Iweala, the WTO Director General, joining us at COP27. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. UN climate talks in Egypt have begun with a deal to discuss how rich countries can help pay for the damage caused by global warming elsewhere. The breakthrough will allow discussion at the COP summit of what's called loss and damage for the first time. Industrialized nations have repeatedly blocked this from the agenda despite demands from developing countries. Now, Ryanair has lifted its passenger goal for the year and downplayed the likely impact of a recession. Europe's largest discount airline says earnings should top €1 billion in the year to March.
Very strong forward bookings and fares into the October school midterm. Christmas looks very strong. Next Easter already, next summer looks strong forward bookings. But we'd be cautious into this winter again. Everything looks good. I mean, what's unusual is this time I think we're going into a recession with full employment. People do seem to be spending, and they're certainly travelling.
Now, the US and Russia are reported to have held private talks in recent months to reduce the risk of a broader conflict over Ukraine. According to the Wall Street Journal, a peace settlement wasn't a goal of the discussions over the weekend. Ukraine's grid operator says it was limiting power supplies to Kyiv and 7 other regions because of damage from Russian strikes. Warren Buffett's Berkshire Hathaway has reported a 20% surge in operating income for the third quarter to $7.76 billion, thanks to its utilities and energy business. But its insurance underwriting segment absorbed a loss of close to $1 billion. Berkshire's cash pile increased slightly to $109 billion. Facebook's parent Meta is reportedly planning layoffs that will affect thousands of staff from this week. The Wall Street Journal reports job cuts could be announced as soon as Wednesday, with employees already told to cancel non-essential travel. Meta is struggling with the growing losses from its metaverse business and a slowdown in its legacy products. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, U.S. voters go to the polls for the midterms. More on that story after the break. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Sharm, COP27. Now, we'll have plenty more exclusive interviews throughout the day. Danny, I'm also really looking forward to speaking to the World Bank President, David Malpass, a bit controversial on his stance on climate change. That's an exclusive for tomorrow, and then, of course, we'll follow all of the markets throughout the day. But now, let's get straight to the markets with you. What do you have, Danny?
Well, Francine, look, it's a week of a lot of risk events, be it, continued conversations we're hearing with you from leaders, be it midterms, or be it CPI on Friday. So what do you do in the meantime? What do you trade on? It seems like we are trading on positive sentiment coming out of China, despite the fact that it is just rumors. Rumors of reopening when it comes to COVID zero, yet officials continue to say that COVID zero is here to stay. Despite that, up 1.7% on MSCI Asia Pacific Index. You're also looking at S&P 500 futures. Those are on the highs of the morning as well in European stocks. That cash market trading is underway. That's up 0.5%. Perhaps what's happening in equities this morning is also a weaker dollar. That's aiding equities despite the fact that you're seeing a 2-year yield which continues to climb higher. The 10-year yield, that is lower. So equities might like that better, might like a lower 10-year yield, not trading on the front end of the curve. But one fly in the ointment of this morning's futures trading is Apple. Apple is down 1% after Bloomberg report that due to COVID lockdowns, you are seeing slower demand. Apple is pulling back on their production of iPhones. Meanwhile, the Wall Street Journal reporting that Meta is firing thousands of staff, yet we are seeing shares moving up 3%. So one of the risk events I mentioned, it's tomorrow's elections, and they're expected to usher in a new era of divided government in the U.S., with polls showing Democrats could lose control of the House and possibly the Senate. Joining us for more on this is our very own Bruce Einhorn. So, Bruce, what has caused the reported swing in this momentum in favor of the Republicans in the run-up to these elections?
Well, Danny, there are some historical reasons at play. Democrats face an issue where the party that controls the White House hasn't actually had a good midterms election since 2002, back in the George W. Bush administration. So there have been 2 decades of pretty disappointing results for the party in charge of the White House, and so it's possible that's what will happen again tomorrow. Add on to that, you have the economic issues like inflation, high gas prices. Those are all in the Republicans' favor. Democrats are hoping that issues like abortion and threats to democracy will help turn out their voters and help to push back against what could be a Republican wave.
All right, so a lot to digest then. So as voters head to the polls, what will the key issues be for them?
Well, again, so for Republican voters, what they're telling pollsters is they care a lot about the economy. They care about high gasoline prices, inflation, the possibility that there's going to be a recession coming up. Democrats are very concerned about abortion rights following the overturning of Roe v. Wade earlier this year. They're worried about threats to democracy, as many Republican candidates who are running are election denialists. They're worried about the possibility of the return of Donald Trump. So those are the key things driving both sides.
Okay, Bruce, thank you very much. Bloomberg's Bruce Einhorn there on the coming election. It is interesting, there does seem to be a divide among strategists about how crucial these midterms are to deciding where equities go from here. Mike Wilson over at Morgan Stanley does say that he is staying bullish ahead of the midterms, that there might be some near-term uncertainty before ultimately providing a catalyst for lower bond yields and higher equity prices. He says a win could be enough to invoke the kind of rally in 10-year U.S. Treasury bonds to keep the equity market moving higher. And that is what we're seeing this morning, an equity market that continues to rally. Well, Bloomberg Surveillance Early Edition, it will continue in the next hour. This is Bloomberg.
We've been saying that this market is going to be choppier and lower for longer because it will be determined by how high the Fed go and how long it stays there.
The economy is not responding to the Fed's tightening. And so they've got a lot more work to do.
We're not seeing cracks in the labor market yet, and so the Fed is going to have to continue on its path.
The fundamentals are still very positive. There is still positive momentum in the labor market. There's still dislocations. Demand is still very strong.
I think what we're starting to see now is us transition to a slow and steady economy as we move forward here.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
10 a.m. in London, 5 a.m. in New York, 6 p.m. in Hong Kong. Our top stories today. China sticks with COVID-0 and delivers downbeat trade data. But investors in Hong Kong and elsewhere don't care. They keep buying, even after big gains Friday. Tech, though, cutting back. Apple is taking a big bite out of expected iPhone 14 production. Meta gains on a Wall Street Journal report that thousands of layoffs will start this week. And US politicians deliver their final messages ahead of the midterm elections that look too close to call. Turnout, though, is expected to be high. Welcome to Bloomberg Surveillance Early Edition. I'm Guy Johnson in London, Madison Mills and Kailey Leinz in New York. Anna and Matt are both off today. Kailey, China still seems to be dictating the narrative.
Yeah, what's interesting, though, is what you are hearing from Chinese officials kind of runs counter to what you're seeing in the markets. Chinese officials over the weekend vowing to be unswervingly committed to Beijing's approach to stamping out COVID, aka COVID-0 isn't going anywhere, and yet equities rallying despite that. The Hang Seng China Enterprise Index up about 3% overnight, tech stocks up by about 4%, so equities largely shrugging off the COVID-0 story. Also shrugging off the story that Guy mentioned, Apple slashing its iPhone 14 production outlook by about 3 million relative to what was originally expected. So that raises some big questions about demand, but again, not really showing up in equities. You are seeing concern around COVID-0 perhaps showing up a little bit more in other asset classes, like in foreign exchange, where the Chinese yuan is the big underperformer among the Asian currencies, weaker against the US dollar by around 6 or 7/10%. 723.47 is where we trade on dollar offshore yuan. And interestingly, you saw iron ore futures down originally in the Singapore session, now actually up by about 0.5% as we continue to contend with the demand picture from China. As for what the picture is looking like here in the U.S., we are seeing futures moving higher, so following on some of that risk-on sentiment, only up about 0.2% or about 8 points on S&P E-minis. In the bond market, just the slightest bid coming in after 3 days in a row of yields moving higher. We're down the better part of 2 basis points on the 10-year to 4.14, and remember, the 2-year is up around 4.70, so we do have a very deeply inverted yield curve. The dollar is a little bit weaker on the day, giving back earlier strength. The Bloomberg Dollar Index down by about 1 to 0.2%. And then I wanted to point to natural gas futures, Guy, up about 8% on the day. You have a winter storm coming in the Pacific Northwest. It's going to get really, really cold across most of the U.S. over the next week, the first big cold snap of the season. So that's lifting gas futures higher, Guy.
Fortunately, over here in Europe, we're still dealing with relatively warm weather. Long may it persist, of course, given what's happening over here with the gas shortages that could be experienced if it does turn cold. Let's talk about where we are in Europe with the European equities. Broadly positive. London and Paris both outperformed Friday. London because of the miners, Paris because of the luxury story. That was China related. Today they underperform a little bit. The DAX, though, is up by around 0.7%. We've actually had some fairly good economic data out of Germany today. Let's talk about some of the other assets that we're focusing on. We've got, those are the US, that's the US data. Let me talk to you about what's happening with European data. European stocks broadly mixed. You are watching, here we go, the German 2-year. Keep an eye on what is happening there. You are seeing a little bit of move lower in yields, a price moving higher. You've got the governor of the Banque de France this morning sounding very hawkish. He's normally fairly mixed in terms of his approach to where monetary policy is going, sitting between the hawks and the doves. Today sounding very, very hawkish. And you do have a little bit of a rollover in crude, but we are still trading around 98.27. So we're just sub 100 on what is happening there. Again, the China story front and center. And that really continues to be the story that is driving global markets. But tech is not far behind, Madison, and that, I suspect, could take over a little bit later on.
Well, certainly traders' hopes of an earlier than expected reopening dashed after China reiterated its commitment to COVID zero. Last week, China locked down the world's largest iPhone factory, impacting Apple's supply chain, of course. Apple now expecting to produce at least 3 million fewer iPhone 14 handsets than originally anticipated this year. Bloomberg's Charlie Wells is joining us now for more from London. Charlie, always a joy to see you. What is the bigger problem for Apple here as we head into the end of the year? Is it these lockdowns on the supply side, or is it a slowdown in demand?
Maddie, great to see you. And this is a really excellent question here. And what I would say is it really comes down for Apple, at least, to demand. This is a company that is so discretionary. It really relies on this idea of consumers, paying more for the joy that they get from these products. So if that demand continues to slow down, as we've been seeing it for the iPhone 14, that could spell trouble for this company. Of course, I don't want to understate the supply issues that they've had. This is probably the biggest supply headwind that they have faced with this China lockdown. But really here, I think it's demand.
Cuts across the board, it seems. We've been talking about Twitter over the last few days. The reaction to Meta's last set of numbers was not good. The concern was always around how much this company was spending. Now we're starting to see stories emerging. The Journal this morning reporting that we could see thousands of layoffs this week.
Slowly but surely, we're starting to see some of the issues that people have feared for weeks. Remember in September, Mark Zuckerberg talking about a potential reorganization at Meta, about people who weren't fitting in at the company, who didn't like it, maybe needing to leave. Well, what this report is telling us is it could be potentially thousands. It could start as soon as Wednesday. People have been told that they should cut non-essential travel, and that comes on the tails of Twitter, of course, laying off 3,700 workers, and then, of course, over the weekend, having some of those layoffs be reversed. So it's anxiety in Silicon Valley in a way that we really just haven't seen before.
Yeah, Bloomberg's Charlie Wells, thank you so much. It continues to be a roller coaster. And of course, there was another U-turn from Twitter. They're not going to make everybody pay for those blue checks until after the midterm. So that will begin on Wednesday. Let's turn now to a call from Goldman Sachs. It has lowered earnings estimates for the S&P 500 for each year until 2024, saying that margin contraction in the third quarter signals more pain ahead. For more, we're joined by Bloomberg's Danny Berger. So, Danny, quite a call.
Quite a call. And Kailey, the reason it is so important is that at this point in the cycle, we're all trying to judge, has there been capitulation? Are valuations cheap enough? Can we jump in yet? Are things bad enough? Well, valuations only look attractive if you are assuming that we're going to get earnings growth next year. If earnings are going to fall, or if they're flat with Goldman Sachs' new call, it does mean that we are still expensive on a price to earnings ratio. So Goldman's saying, look, we previously overestimated the margins that would be maintained by companies. There's going to be greater margin contraction than expected. That means S&P 500 growth for next year, it's going to be 0% when it comes to earnings. It was at 3% previously in their view. If we have a recession, though, then EPS will fall 11%. And in that scenario, it is a very difficult call to say that stocks are attractively valued. Now, we do have JP Morgan saying that, look, yields are likely to peak in treasuries, and that does mean that all of a sudden equities are attractive. So this is the debate. Are earnings or are yields more attractive? Well, I'm going to combine them both for our radio listening audience. I have what's typically called the Fed model. It's income from stocks versus income from treasuries. This is one way to look at valuations. Well, if we are peak now and yields stay where we are, it still is very challenging math for stock valuations. The premium you get on earnings from stocks is at its lowest since 2010. If yields are going to look attractive, if we're going to get a premium back for equities, either we need to see a pretty big pickup when it comes to treasury prices, or stocks need to tumble, or earnings need to be very strong. Kailey, considering Goldman's call, that doesn't look likely.
Yeah, so maybe Tina isn't going to be coming back to life anytime soon. Bloomberg's Danny Berger, thank you so much. Of course, we also have to consider the implications of the midterm elections and what they mean for markets. On that note, Morgan Stanley's Mike Wilson publishing this morning saying investors should stay bullish ahead of the U.S. midterm vote tomorrow. He says the midterms may present near-term uncertainty before ultimately providing a catalyst for lower bond yields and higher equity prices. Madison.
Yeah, and Kailey, we've got a big day tomorrow because the midterms are expected to usher in a new era of divided government in the U.S., with polls showing Democrats losing control of the House and possibly the Senate. Still, President Biden saying he's confident heading into tomorrow.
We're going to win this time around, I think. I feel really good about our chances. I haven't been in all the House races, but I think we're going to keep the Senate and pick up a seat. I think we have a chance of winning the House. I don't think we're going to not win. Keeping the House. So I'm optimistic. I really am.
Anne-Marie Horton, Bloomberg Washington correspondent, joining us now from D.C. Anne-Marie, thanks for joining us bright and early. Tell us what the big headline is going to be heading into Wednesday. What do we know?
Well, at this moment, already 40 million individuals have casted their vote, so we are seeing really robust turnout. Remember, 2018 was huge record turnout for midterms. Potentially, this one is going to surpass that. As you said, Madison, we already know that the House looks like it's going to swing. A big question is going to be how big that margin is going to be for the Republicans. And then, of course, everything's going to come down to the Senate to see who is really going to control the entire Congress. Key Senate races that we're going to be really watching are Georgia, Nevada, Arizona, and of course Pennsylvania, where the president was over the weekend, as well as former President Barack Obama. Really, for me, though, last night, President Biden going to Bronxville, New York, just shows really how the Democrats are on the defense going into this midterm election. This is deep blue, and it's issues like inflation and crime that they're having the President of the United States come and really try to get out the vote, even in New York.
Amazing stuff. AMH in DC, thank you very much indeed. Bloomberg's Anne-Marie Horton. And of course, don't miss our special coverage of the US midterms on Election Day. That's tomorrow. It kicks off at 8 p.m. Eastern. Now, the United Nations climate change talks kicking off over the weekend, yesterday, in Egypt. This is the world faces threats from war, an energy crisis, and the risk of a global recession. Kristalina Georgieva, managing director of the IMF, says global inflation may be nearing its peak. She spoke with Bloomberg's Francine Lacqua earlier at COP27.
It is very possible that we are peaking. We now see central banks very united on fighting inflation is top priority, and rightly so. If we don't succeed, it would be anchor, and then the foundation for growth, which is price stability, is dented.
Bloomberg's Francine Lacqua joins us now from COP27 in Egypt. Fran, how low are expectations? China's not there, India's not there.
Yeah, expectations are pretty low, but at the same time, this was never going to be, Guy, actually one of those big COPs where we have headline numbers and great agreements. If you look at what the heads of state, 100 of them, and over 10,000 participants want to achieve is 4 goals: adaptation, mitigation, financing, and collaboration. What does this mean? They take the Paris Agreement, they take Kyoto, and actually they take at Glasgow, and then try and make it work. This will revolve around 2 things: giving money to the poorer nations. This is loss and damage, something that they at least agreed to discuss. Now, they're not big hopes that maybe we get a signed check right now, but just the fact that they didn't have to have a fight to put it back on the agenda could be something pretty good. The second thing is also, this is the first COP in Africa. Remember, if you look at the emissions of this continent, it's only 3%. So we're hoping that there's some kind of financing to make sure that they don't get the fuel out of the ground and go to renewables straight away as they use more energy. And the third, of course, is finance. And that, yes, we've scaled back expectations, but a couple of the organizers say, look, maybe we're less aggressive with what we're expecting banks to do, but we get a broader church. It's all about momentum. Even if we don't achieve that much, Guy and Kailey, it's about moving forward and take a step instead of taking a step backwards.
All right, Bloomberg's Francine Lacqua covering COP27 from Egypt. Thank you so much, and we look forward to having her back later on this hour for an interview with the OECD's Secretary General. Also coming up later this hour, it is election eve here in the U.S., and polls show the economy is the overriding issue for voters who will determine which party is in control of Congress. We'll discuss that with Mohamed Younis, the editor-in-chief at Gallup, coming up. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Madison Mills with Kailey Leinz in New York and Guy Johnson in London. Anna Edwards and Matt Miller are off today. All eyes are on the Fed's next meeting, December 14th, but we got a lot of big eco events happening between now and then. So let's just do a quick preview of what's to come. This Thursday, of course, we've got the latest CPI print, the most important since the last before the next. We have two prints coming before the next Fed meeting and another jobs report. As we know, the Fed closely monitoring that jobs market to see how the war on inflation is going. The question is, how much of an impact could these events have on the Fed's peak rate? We're going to discuss all of that with Bloomberg's Simon White joining us from London. Simon, thanks for being here. This next CPI print, the upcoming jobs numbers, to what extent are these events already priced into markets?
Well, I think when it comes to inflation, the market has been, the rates market that is, has been kind of front running a fall in inflation. And an outright fall, but actually the rate of change of fall. So if you look at that cuts that are priced in for 2023, 2024, that correlates very nicely with a fall in inflation to roughly 5.5% in the year-on-year number. And that's kind of been in the price for the last 6 to 9 months or something like that. So I think if we don't see that in the sort of relative near future, that will lead to the kind of the longer part, if you like. If the Fed is going towards a higher for longer, the market's kind of got the higher part, but it hasn't quite got the longer part yet. That's not really been priced in.
The Fed looks relatively predictable compared with Chinese COVID zero. How do you price in that kind of volatility right now? How do you build it into a portfolio when you could get some really wild swings around tweets, utterances, expectations?
The short answer is you can't. I mean, if anyone is really managing a lot of money right now, they're probably considerably less risk than they had before. We've never really been in this environment of such huge uncertainty for a long, long time. And the kind of the pressure valve is inflation. Everything kind of worked in a kind of everything low volatility, stability. It was all predicated on low inflation, continuous expansion. And the more you repress something, and inflation was a kind of an element of that. When it comes out a lot, and that's where we are right now. We have this volatility's out the bottle. The genie's out the bottle. So in terms of you're running risk right now, you're not taking a lot of risk, and if you are, you're probably a bit crazy.
Well, and of course, Simon, there's the question of how inflation weighs on corporate profits. We heard from Goldman Sachs cutting its earnings outlooks out through 2024 because of margin contraction. How does that track with what we've already seen now that the bulk of earnings season is over for the third quarter?
Yeah, I mean, it was a bit of a mixed season. We had some pretty high level kind of misses, obviously, but the leading data is pretty unequivocal. Earnings are going to continue to fall. I think you're going to have an earnings recession probably by the first quarter of next year. And it really puts equities in a very difficult position fundamentally. The multiples have been falling, margins are set to fall even further. The only thing really holding things up right now are revenues. And of course, if you're going to a slowing economy, revenue should fall. So it's from a fundamental perspective, it's very difficult to see what's going to keep equities afloat. And it's just going to make life very difficult. The bear market is here and it's going to be here for a while.
Simon, great stuff as ever. Thank you very much indeed. Bloomberg's Simon White joining us from the Markets Live team. If you want more markets analysis, and I'm sure you do, you can check it out on the Bloomberg. All you got to do is punch in MLIV Go on your terminal, and you get this, the rolling blog on what is happening in markets. Some great analysis within that blog. Check it out. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Madison Mills in New York and Guy Johnson in London. Anna Edwards and Matt Miller are off today. Now, keeping you up to date with news from around the world, here's the first word. Ukraine's President Volodymyr Zelensky wants Iran to be punished for helping Russia. Zelensky said if it wasn't for Iran supplying weapons to Russia, quote, we would be closer to peace now. Both Ukraine and the U.S. say that Russia is using Iranian drones in the war. In China, exports and imports unexpectedly fell for the first time in more than 2 years. Overseas consumers bought less, while demand in China was hurt by COVID-0 controls and a housing slump. Brazilian exports had been a major support to China's recovery in the past 2 years. Warren Buffett's Berkshire Hathaway has taken a beating on auto insurance. The conglomerate reported a $962 million loss on insurance underwriting in the third quarter. That's the worst quarterly loss in a year. Auto insurers have struggled to keep pace with higher used car prices and the rising costs of accidents. And in Houston, furniture store mogul Jim McIngvale won $75 million on his bets that his hometown Astros would win baseball's World Series. That includes a $30 million payout from Caesars Sportsbook that the company calls the largest ever at a legal sports betting site. Some of McIngvale's winnings will go to his customers. Those who bought a mattress for $3,000 or more will get their money back. So this is just an incredible story, Madison. Obviously a huge payout for a bet that paid off. And of course, I just think of gambling. You can gamble on sports. You could also gamble by buying lottery tickets. And just PSA, you might want to go out and buy a Powerball ticket because that jackpot's about $2 billion now.
Yeah, Kailey, my most toxic trait is believing that if I bought one lottery ticket, I would absolutely win. So maybe we should just all pool together and buy a ton in hopes of getting that $2 billion payout.
Yeah, fair enough. I know you're heading to Florida to cover the midterms. You can buy tickets down there. I'll buy some in Pennsylvania, and we can split the winnings if that works out for us.
Perfect.
But up next, we're going to be heading not to different U.S. states, but over to Egypt, where COP27 is underway. Our Francine Lacqua will be live there with an interview from the OECD Secretary General. This is Bloomberg.
This is Bloomberg Surveillance, the early edition, and here is what you need to know. China sticks with COVID-0 and delivers downbeat trade data, but investors in Hong Kong and elsewhere don't seem to care. They keep buying even after big gains on Friday. Tech cuts back. Apple is taking a big bite out of expected iPhone 14 production. Meta gaining on a Wall Street Journal report that thousands of layoffs will start this week. And US politicians deliver their final messages ahead of the midterm elections that look too close to call. Turnout is expected to be high. I'm Guy Johnson in London, Madison Mills, Kailey Leinz in New York, Anna Edwards, Matt Miller, both off today. Kailey, how are we looking pre-market?
Well, it's interesting, Guy. Obviously, there's a bunch of huge potential risk events this week, including tomorrow's midterm elections and the CPI on Thursday. But equities are rallying on this Monday morning. Right now, futures are in positive territory. We're up about 0.4% or so on S&P E-minis, higher on NASDAQ futures as well. And in the bond market, just a slight bid coming in. The 10-year Treasury yield down about 2 basis points to just shy of the 4.14 level. Of course, that's after we've risen for 3 days in a row. Two stories I want to point to in the commodity complex. First is natural gas futures up 8.4% here in the U.S. as we brace for winter weather in the Pacific Northwest and colder weather across most of the country over the next week. So the first big cold snap of the season. And then oil essentially unchanged on the day. WTI right now trading at 92.56. It was lower earlier. A lot of that having to do with concern around China and the COVID-0 policy there after officials in China over the weekend essentially said that's not going anywhere. We are going to stay very strict about reining in COVID-0. As for how that's translating into equities, of course, we saw Chinese equities rallying in spite of that in the overnight session. And as a result, a lot of those U.S. listed Chinese companies are rallying in pre-market as well. Alibaba up 1.3%, Baidu by about 2.4%. when it comes to those ADRs. Elsewhere in tech, another name that's rallying, Guy, you mentioned this, Meta, getting ready to cut off potentially thousands of workers from their jobs this week, trying to rein in costs. Investors seem to like that proposition, with the stock up nearly 4% before the bell. Apple, though, moving lower, down about 1%. This is after a Bloomberg scoop overnight that they could produce 3 million fewer iPhone 14s than originally anticipated. Part of that is a supply issue with lockdowns in China, but another part is softening demand, Guy.
Absolutely. Here in Europe, stocks are bid, but it does feel a little bit more cautious than it did Friday. Kelly, talking about what is happening in China. The story in China, difficult to fathom at the moment, and as a result of which, while we are seeing a bid into equity market, it doesn't feel like Friday. So stock 600 up by around 0.5%. Keep an eye on what's happening in the bond market. We've got a bid in the bond market, which is interesting, given the fact that we've got some very hawkish comments coming through, I think, from the governor of the Banque de France. You've actually seen some OK data out of Germany as well today. Continue to pay attention to that. The ECB sounding significantly more hawkish over the last few days, certainly in comparison to the Bank of England. Brent crude absolutely flat. Big rally in commodities on Friday. A little bit more cautious today. We're trying to figure out what is happening with the global demand picture. Take a look at the Chinese trade data, which is certainly slowing down fairly rapidly, both in and out. And that all contributes to a more cautious tone, certainly coming out of energy, which feels a little bit appropriate, considering that we need to talk about what's happening in Egypt right now with COP27, Madison.
Absolutely. Let's get back to COP27, like you said, in Egypt, where Bloomberg's Francine Lacqua is sitting down with the OECD's Secretary General. Francine, great to speak with you. I know you've got a slate of huge interviews this week, but just to kick us off, what would you say is the big news so far heading into COP?
Well, if you want to be optimistic, Maddie, then you say that, look, yesterday we got a breakthrough because at least loss and damage is something that's on the table. Now, we don't have a resolution, but actually we could have some headway on that. So I am delighted to be joined by the OECD Secretary General. He's Mathias Cormann, and he joins me now. Secretary General, thank you for joining us. We're at COP, and first, it's difficult to get a real reading on what the war in Ukraine is doing to emissions. So have we left the emissions, targets because we just want to focus on energy security, or will that come back to the forefront?
Well, I mean, the context for climate action has certainly become more challenging compared to COP26, but the need for globally ambitious and effective action on climate change is as urgent and as important as what it was. And while we will see in the short term, or while we have seen in the short term, a lift in the reliance on fossil fuels, I mean, what we will also see is an acceleration in the structural transformation as a result of the higher energy prices and some of the challenges that we're witnessing at the moment. I think you'll see that this will be the platform from which the structural transformation we need, the clean energy transition we need, will further accelerate.
We also need money transfer, and this is what loss and damage is about. Do you think we'll actually achieve action at COP27?
Well, I mean, that is something that we want to achieve here. That's something that we want to see. We want to see real progress. I mean, the world will need $4 trillion US per year in climate finance investment by 2030 if we want to achieve the objectives of the Paris Agreement. I mean, that is 4 times as much as what is being invested as we speak right now. So there's a significant gap. We will need to be intelligent in terms of deploying public investment, but also leveraging significant amounts of private sector investment.
But on loss and damage, where do you stand on that? So should there be a transfer, a quite significant transfer, to basically pay reparation for some of these climate change phenomenons to countries, poorer countries that have not emitted but are suffering the consequences?
Well, developed economies have a responsibility to support developing economies in meeting both their climate mitigation objectives, but also their climate adaptation objectives. I mean, we need to, clearly severe and extreme weather events are accelerating, the economic impacts are worsening, and there is a particular responsibility for advanced developed economies to support developing and emerging economies around the world.
Are you disappointed that China's not here?
Well, it's always better when all major emitters and all countries around the world participate in person in the global conversation. When climate change is something that can only be addressed effectively, globally, with strong global cooperation, and so of course we would always rather if everybody was able to make it.
And of course I'm talking about the head of state, because we do have some climate negotiators from China. Talk to me a little bit about your climate monitoring program. So you're releasing it a little bit later. What will it show?
Well, I mean, so what we're seeking to do is really to support countries around the world learning from each other, what works, what doesn't work. I mean, track progress in terms of the commitments that countries have made, track progress through the provision of real data and real comparative information, but also use it as a way to provide advice on best practice, best policies that countries around the world can copy in order to meet the objectives, the climate objectives we all share.
So, I mean, is it, again, if you had to bet on a concrete action being taken here, what would it be, and what is your climate report showing that they need to prioritize?
Well, what we are showing is essentially what countries around the world are doing, how they're tracking, and the OECD, one of our key strengths by presenting the data, by putting the spotlight on what has been achieved and what hasn't been achieved, we actually force countries to do more in order to live up to their promises. I mean, in the end, what you don't measure, you can't manage. And our climate monitor really is about putting the mirror up and forcing countries to continue to live up to their promises.
And I know you're also working on a framework to look at carbon pricing, but why do we just not have a carbon price already?
Well, you know, if it was that easy, it would long have been done. I mean, the good news is that about 63 countries around the world, representing about 83% of world GDP, have committed to the carbon neutrality objective. But countries around the world are all using a plethora of different measures and approaches, and what we think is desperately needed is a globally more coherent, better coordinated approach. And in order to help facilitate that, we are providing a platform again to share information, to share data, to map out all of the different approaches that are being pursued, but also to compare their effectiveness and help inform better decisions.
Have we reached peak inflation?
Inflation obviously is a significant challenge right now, and central banks around the world are taking the necessary steps to get inflation under control, and fiscal policy very much needs to operate in alignment with monetary policy. We do expect inflation to start coming down throughout 2023, but I mean, there are a lot of uncertainties in the world right now. There's still a lot of issues that we can't predict from where we sit right now. We don't know how much longer the war in Ukraine will go, how much worse it might get. We don't know what some of the challenges might be as Europe goes through the winter, for example, in terms of energy security.
Too soon to call peak inflation? Would you say, like, we just need to wait and see?
From where we sit right now, we are expecting inflation to start coming down throughout 2023 on the back of monetary policy tightening, on the back of supply chain bottlenecks easing, and also with, of course, global growth slowing and demand slowing.
Mathias Cormann, thank you so much for joining us. So that was, of course, Secretary General of the OECD. With that, Kailey, I'm going to send it back to you in New York.
All right, Bloomberg's Francine Lacqua live at COP27 in Egypt with the OECD Secretary General. Thank you so much. Now, coming up, we will turn our focus from what's happening globally to what is happening domestically here in the U.S. with the midterm elections coming up tomorrow. Mohamed Younis, editor-in-chief at Gallup, will join us with the latest on what polling indicates about what's important to voters as they head to the polls. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Microsoft President Brad Smith. That's at 10:45 a.m. in New York, 3:45 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Madison Mills in New York and Guy Johnson in London. Anna Edwards and Matt Miller are off today. Well, the state of the U.S. economy holds the key to who will win control of Congress in tomorrow's midterm elections here in the U.S., with polls suggesting that hopes and fears for the economy outweigh the many other concerns for voters. Mohamed Younis, editor-in-chief at Gallup, joins us now for more. Mohamed, the closer we have gotten to the vote tomorrow, the more momentum seems to be building for the Republicans. What is the driving force behind that?
It's hard to name one thing. I think the most important issue in this election, as in most elections in the United States, is going to be the economy, now more than ever, with inflation really front and center in terms of people's focus. Historically, the economy has been the most important factor, so it's going to be even more so this time. There's some runner-ups like abortion and concerns over crime. But overall, really, economy is first with a very, very far second place to those two other issues.
And if it all is about the economy, is it then just trying to replace whoever is in control to hopes that they will change the economic trajectory of the country? Or is this really about Republicans being seen as better stewards of the U.S. economy?
We know that historically, Republicans have been seen as better stewards of the economy. We've asked that question for generations. Which party do you think does a better job of managing the economy? Republicans have that advantage. It's important, Kailey, as we've talked about before, to shy away from past equals the future on a lot of these things. Certainly, any incumbent president is facing an uphill battle with votes. The Democrats don't have as much exposure as they did in previous midterm elections. However, the economy really is a foundational issue, and it will continue to be an issue for voters, depending on where they vote and what options they feel will better impact their economic outlook. There are also a lot of local issues that people will be voting on. So it's not just the economy, but that'll be the most common across all districts.
It's certainly the most common, Mohamed, but as Mick Mulvaney told Kailey last week, President Biden ending his big speech last week talking about the insurrection. I wonder to what extent the Democrats focusing on election chaos, January 6th, is resonating with voters, specifically Republicans. Is that kind of commentary going to move the needle heading into tomorrow?
I think that kind of commentary really speaks to their base, to the Democrats' base. One of the questions we ask is about trust in the electoral process. And right now, 85% of Democrats say they trust that the votes counted across the country will be done so fairly. 40% of Republicans share that view. So that's a huge gap between Republicans and Democrats in terms of their trust in the process. That being said, where people live, again, I can't stress that more, it really determines what they're voting on more than the national focus and national elections. Americans are very knowledgeable of their local government. They have a much more positive perception of local government than national government. So in many of these contexts, I think what's happening locally and voices locally will probably be much more relevant to how people choose to cast their vote than anything coming out of Washington.
Yeah, I mean, your polling on the divide between Republicans and Democrats on the accuracy of election results is shocking, those numbers. I wonder to what extent you think that divide is going to lead to a lot of contested elections as we continue to get results in Tuesday heading into Wednesday.
I think it depends on how close those results will be. Certainly, contesting elections has now become a common part of the American political lexicon. I don't think it's going to be something that we don't see at all, but really depending on how close the vote is in some places, I think will be the greatest factor determining whether elections are contested. I think we also need to remember contesting the outcome of an election is not necessarily a bad thing. It's afforded within the process of the electoral system here in the United States. The greater concern really is people losing faith in the process that really only represent one side of a two-party system. I think that's what's most concerning. Still, 40% of Republicans do have trust in the process itself, and it will be really critical to see whether future cycles build up that Republican trust in the process again, or whether we see it continue to decline. Just a few short years ago, 60% of Republicans had trust in the electoral process. So it's not something that's unachievable.
Mohamed, just very briefly, how does what happens this week change the tack we're on towards 2024?
It means everything for 2024. The presidential election begins the day after the midterm election here in the United States. We know that President Trump has already hinted to, so has Governor DeSantis, about their plans for running in the future. So as soon as we see a result from this election, expect to see the presidential election swing into full force.
Yeah, and of course, we are expecting President Trump to announce another run at the presidency sometime in the week following Tuesday's vote. Mohamed Younis, editor-in-chief at Gallup, thank you for waking up early for us and providing some insight ahead of the midterms. Now, when it comes to the midterms, the crypto industry also is going to have its eyes on the composition of Congress. The question is, after the vote, will we finally get progress on regulation?
Our regulators and, frankly, our Congress is an hour late and a dollar short. and we need to catch up with where these cryptocurrencies are going.
Congress has been calling for greater regulation of crypto for years, but it's been a lot of talk, and to this point, not a lot of walk.
We have the intention, we're just not quite getting it over the line.
The crypto industry has been asking Congress to help create the rules of the road, but optimism on progress has faded as the midterms draw closer.
There was some hope from many in industry that this was actually going to happen this year, that a bunch of bills that had been proposed were promising, that we could actually see some movement here on Capitol Hill. But just like pretty much everything in Washington, heading towards the end of 2022, it all seems kind of stuck right now.
The bills that have gained the most traction include legislation to regulate stablecoins and to give the CFTC more power to oversee digital assets. But success on those initiatives will have to wait until after the midterms.
I think both Kirsten and I believe that the bill in one piece as a total bill is more likely to be deferred until next year. It's a big topic, it's comprehensive, and it's still new to many U.S. senators. It's a lot for them to digest with the few remaining weeks we have in this calendar year.
Big names in crypto like Sam Bankman-Fried, the billionaire founder of FTX, are also trying to make change with their dollars, emerging as influential political donors. While he says he's motivated primarily by pandemic prevention and wants to support candidates who will prioritize that, he also has been pushing the regulatory agenda.
I have a duty as a member of the industry to try and get us regulated, to try and move the industry in a more responsible direction. And I think that requires engagement. I think it would be irresponsible of me not to engage, with Capitol Hill, with regulators. And the things that I've been arguing for are more regulation for the industry. I think that's what's right for the country.
Bankman-Fried is the fourth largest individual donor this midterm cycle and has made about $40 million in political contributions this year. He has said he could give even more in the 2024 race.
I think that you're going to see more people pushing into politics because now the interaction with DC is going to be one of the main drivers of whether enterprises are able to grow and operate successfully.
And we'll have much more on this topic later this week on Bloomberg Crypto. You can catch us at a special date and time post-midterms. We'll be live on Thursday at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg. Yep, great. Kailey, I'll talk about midterms if that's okay with you. Yeah, cool. Sounds good. Okay.
And then on Friday, Singles Day. Now look at what's ahead this week. Tech earnings continue with Lyft reporting today. That follows Lyft announcing a layoff 13% of its staff last week. Coming up tomorrow, Americans head to the polls Tuesday for midterm elections, results of detention. Wednesday, we could get contest results as well. A lot to watch there.
This is Bloomberg Surveillance Early Edition. I'm Madison Mills with Kailey Leinz in New York and Guy Johnson over in London. Anna Edwards and Matt Miller are off today. So a look at what's ahead this week. Tech earnings continue with Lyft reporting today. Of course, that follows Lyft announcing it will lay off 13% of its staff last week. Now, here in the U.S., Americans heading to the polls Tuesday for the midterm elections. Results are going to take time, trickling in late Tuesday, early Wednesday. We could also get contested results as well, so a lot to watch there as it unfolds. Then heading into Thursday, the latest U.S. CPI print is due, so all eyes are going to be on that to see how we're doing with inflation. Also on Thursday, we have some earnings from Chinese chip makers. And then on Friday, Singles Day, the world's biggest shopping event of the year takes place in China. Alibaba up this morning, perhaps potentially a little bit in anticipation of Friday's big day. But for now, Kailey, I know you and I are very focused on the midterms. I'm heading to Florida in a couple hours here. You're heading to Pennsylvania. So we will be very busy this week monitoring the results as they come in.
Yeah, and for Pennsylvania, at least, it could be a long time before those results do come in, because it's one of the states in which they can't start counting mail-in ballots until 7 a.m. on Election Day. And about 1.4 million people requested ballots. So it's going to take some time to count those. Election officials have already warned us about that. And then for the Senate race, which is crucial, Fetterman, the Democrat, versus the Republican, Dr. Mehmet Oz, their margin right now in polling is virtually nothing. And if the margin is 0.5% or less in Pennsylvania, it will go to an automatic recount. So for one of the races that could decide the balance of the Senate guy, it could be days before we actually have a final result. But of course, there's a number of other races we're watching as well. And the markets have to pay attention to what a divided Congress might mean.
Yeah, generally a fairly good outcome for markets. What I want to know is, what does this mean ultimately for 2024? Does Joe Biden run? Does Donald Trump run? Does DeSantis run? I know Tom Cotton's out, but there's an awful lot riding on this election in terms of what the runners and riders are going to look like into 2024. It's going to be fascinating the next few days how they position themselves.
Yeah, and of course, we already had Trump alluding to his rivalry with DeSantis in remarks made over the weekend. Madison will be on top of that for us from Florida. We'll have reporters all over the country. Ed Ledlow will be in Arizona as well. Our very own David Weston will be hosting special coverage of the U.S. midterms on Election Day. That will take place tomorrow, 8 p.m. Eastern, live from Washington. Madison and I are going to head to our respective travel at the moment. That wraps it up for Early Edition. More surveillance is ahead with Tom, John, and Lisa, so stay tuned. This is Bloomberg.